Welcome back to Grow My Savings. Today we're tackling a question many beginners ask: do I need an emergency fund, insurance, or both? The truth is, both are important, but they serve different purposes. Knowing the difference can save you stress, money, and even prevent financial disaster. By the end of this video, you'll know exactly how to protect yourself and your family without overthinking it. An emergency fund is your personal financial safety net. It's cash you set aside for unexpected life events: medical bills, car repairs, job loss, home emergencies. Rule of thumb: aim for 3 to 6 months of living expenses in a high-yield savings account. Why cash? Because emergencies often require immediate access, and you can't rely on investments or credit in the middle of a crisis. Think of it as your first line of defense, a buffer to keep life running smoothly when the unexpected happens. Insurance, on the other hand, is a risk transfer tool. Instead of paying everything yourself, you pay a premium, and the insurer covers big costs if something happens. Common types include health insurance, covers medical expenses beyond what you can pay out of pocket. Life insurance protects your family if something happens to you. Car/home insurance covers damages, theft, or accidents. Disability insurance replaces income if you can't work. Insurance is not cash in hand. It protects against major financial hits that would be too expensive to cover yourself. Here's the key: you need both, but they serve different roles. Your emergency fund handles small to medium surprises. Your insurance handles big, catastrophic events that could wipe out your savings. Example: your car needs $500 in repairs. Emergency fund covers it. Your house is damaged in a storm. Insurance covers the big cost. Without either, you could face debt, stress, or financial ruin. If you're just starting out, build a small emergency fund first. Even $500 to $100 or $1,000 is better than nothing. Get basic insurance coverage: health, auto, and renters, homeowners. Grow your emergency fund gradually. Aim for 3 to 6 months of expenses. Review your insurance needs annually. Life changes, costs change, and your coverage should too. Remember, both work best together. One protects against small daily surprises, the other shields you from financial disasters. Emergency funds equals cash for immediate access. Insurance equals protection from big, costly risks. You need both to stay financially secure. Start small, grow steadily, and review your coverage regularly. By planning ahead, you can face life's surprises confidently without panic or debt. Thanks for watching Grow My Savings. If this video helped clarify what you need, hit like, subscribe, and share it with someone starting their financial journey.